Okay, I think we got a pretty good number at about 24. Are you ready?
Yes, ma'am.
Yes, ma'am.
Okay. So this is our last assignment, last week of work, and then I'll meet with you next week on Monday to talk about the final exam. And then I'll open the final exam on the first day of finals week, and you'll have that week to take it, roughly. So I'll talk more about that next week. So we're just wrapping up lesson 9 that includes the budgeted financial statements as well as an analysis on the bakery that we talked about a while back. So remember, they're losing money. And what I want you to look at there is what number of baked items would they have to sell in order to break even. So you'll go back and calculate break even for the bakery. And also what happens if we change the price? So what does that do to break even? So it's something we call sensitivity analysis, where you're kind of playing around to see what it would take to turn the bakery around. Okay, so that's all we have left to do. The due dates, same as usual. Wednesday, homework, Thursday, quiz, and then you have a short question to post and a short answer. Thursday, Friday, so same as usual. And like I said, we're going to be working on the budgeted financial statements as well as looking at the bakery segment to analyze it. So learning objectives include creating those budgeted financial statements and analyzing the bakery, as well as performing sensitivity analysis. So like I said, that means playing around and seeing what volume would we have to sell in order to break even, what price would we have to charge in order to improve our position and maybe knock that number down a little bit. So I'll talk to you more about that as we get going here. So last week you did all these front end pieces. How did that go?
Good.
Okay, any struggles or any parts that you thought were harder than other parts?
I'd say not particularly.
Yeah. Maybe some of the cash budgeting stuff where you had to really pull together different pieces is pretty tricky.
Yeah.
Mm-hmm. Yeah, I would say it's one of the harder things to teach and harder things to learn. Most of my students say it's pretty tough to do. So I haven't had a chance to, sorry about that. That's my crazy dog, hang on. Okay, he'll be all right. Let me shut my door. Hang on, come on. Sorry. Okay, so this week we're wrapping it up. I know some of you, I saw your work, a couple of you had questions that I helped you work through. If you've already done your budgeted financial statements and they came out okay, then that's fine. You can continue to do that. However, if you had mistakes in any of these preliminary pieces, those mistakes are going to trickle through. So I did post a new template for you to use to be able to create these budgeted financial statements using correct data. So if you haven't started the assignment, I highly recommend you just open the new template to get that going. Like I said, some of you have already moved ahead and done some of that stuff. If you have, make sure that these parts are correct. I'll try to get those graded as soon as I can, but I got a bunch of grading to get done. Okay, so budgeted financial statements, if you remember from the beginning of the semester, so this is a nice way for us to kind of go back to the beginning and kind of wrap it all up, right? There's 4 of them. And do you have to do them in this order that I gave you here? Is that required?
Yes.
So when you do the budgeted income statement, you get net income. That's the bottom number on the report. You get the profit, and that number goes into the budgeted statement of equity. So this report, you get net income, that feeds this report. And then you get totals for the statement of stockholders' equity, which go on the balance sheet. And then to do the statement of cash flows, you need the income statement and the balance sheet. And you need pieces of the statement of stockholders' equity. So they're all interconnected, right? So you're going to start obviously with this one. Don't do them out of order. Take them right in order. All right, so I just want to briefly walk through what you're going to be tapping when you go to create each one of these statements. For the income statement, you're going to go back and pull from the sales budget, from the cost of goods sold budget, from the SG&A budget. So you're going to be referencing back and pulling information forward. And then you'll also pull together other income and expenses. And you'll need to go to the mortgage amortization schedule and the investment schedule to do that. So watch my videos for information on how to get that. And also, of course, I've got all those cell references listed in the panels on the side. So that'll help too. Really do recommend you watch the videos though, they're pretty short. Right, so I think I have 4 videos this week and I don't think any of them are 10 minutes long. Most of them are like 6-7 minutes. So make sure you watch those. It gives you insights that you'll need for passing the quiz and stuff. All right, then when you go to do stockholders' equity, like we said, you're going to need this. You're going to need the profit from the income statement. And then you're also going to need any changes in, let's say, common stock. So to keep things simple, for your 2020 budget, I didn't have you sell any more stock. So I kept that at 0. You'll see that in the video when I walk you through it. So really the only thing you're going to need, because you don't have any stock sales, is the net income piece. And you can wrap that up. But in the future, this is where you would pull in your financial budget. And your financial budget has all the transactions for stock and long-term debt. Okay, then when you get to the budgeted balance sheet, this is where you got to really pull in a ton of pieces. So you're going to use the cash budget, you're going to go back and use the sales budget and collections information for accounts receivable. You're going to grab those desired ending inventory items you created on the sales budget. You're going to look for capital budget long-term asset plans and depreciation schedules. You're going to look for accounts payable information, wages payable information. You're going to use the mortgage payable schedule, and you'll use a budgeted statement of stockholders' equity. So it's a huge effort to pull the budgeted balance sheet together. So make sure you watch the video to get help on that. All right, then the last one, the statement of cash flows, is where you pull in from the statements themselves. So mostly you'll be using the financial statements that you've already created. And I also, to keep things simple for you, I did not add in any capital expenditures, so I didn't buy any more land, no more buildings. I was just trying to keep it as simple as we could. If you want to get into that kind of stuff, take my next class, the 302 class, and we'll go to the next level in there. But I just mention it here because this is where you would pick it up. You would need it if you had it. Okay. All right, let me hop over there real quick and then I'll come back. I only have a couple of slides left after that. I'm going to talk to you about the bakery analysis. All right, so here's your income statement. So you're going to get that wrapped up. You see that Excel file okay, everybody?
Yes, ma'am.
Okay. So again, watch the videos so you can see. I also gave you this hint down here. So make sure that that number equals this number before you move on. Okay, and then when you go to the statement of stockholders' equity, this is where you're going to pull that across. So you're going to put equals and reference back and grab that number and pull that back, right? This is actually going to be 0 because we didn't have any. I was trying to keep it simple. Okay, so once you enter that, then this will update. All right, that's all you got to do there. That one's nice and easy. This one is very tricky. There's a lot of moving pieces and a lot of work to do. So I give you these references, and also please watch the video so you can make those connections. There's a spot right here that checks, this should be 0, right? Or if it's even like $1 or $2, that's okay. Sometimes you get little rounding errors because we have a lot of trailing decimals. That's fine. In your budgeted cash flows, so again, I'm walking you through how to do that and why it's structured the way it's structured. Really, really want you to watch the video so you understand like some of this coloring I put in and how to make this run out. Okay, then you have a ratios tab to do. This is fun because you get to see how the budgeted results that you have projected create significant improvements pretty much all the way down through. So you get to see where you expect to land given what you forecasted. So it's really awesome to do. So these would be all projected numbers. And then finally, I have 2 more slides to talk to you about this, but let me just show it to you because we're over here. This is what you worked on previously, like a month, maybe 2 months ago, where you did the analysis of the bakery, and this was the loss we had. If you remember that, that's from several assignments ago. Assignment number 5, week lesson 5. It's about half a semester ago. What you're going to be doing here is looking at this analysis where I've split these costs. So all the costs are being split into either avoidable costs. So if we shut the bakery down, could we avoid those costs? And so these are the costs, I'll talk about them in the video, that are avoidable. And then these are the costs that I'm saying to you that are unavoidable, meaning if we did close the bakery, we would still incur these costs. They would still be there. So that means that the roasting business and the cafe are going to have to absorb this. So that's going to affect their profitability. But we can avoid a huge amount of expense, right, if we close the bakery. So that's the type of analysis you're going to be doing. I also split them for you in terms of their nature, their behavior, variable versus fixed. So some of the fixed costs are avoidable, and we call those discretionary fixed. So it means to your discretion, you can incur those or not, but it's fixed because it's a planned amount that you expect to spend, and it doesn't depend on volume. It's just a fixed amount you expect to spend. Whereas these over here are what you would call committed fixed, and these are unavoidable. That's why we say they're committed. We can't get out of them in the short term. Whereas these are all costs we can get out of in the short term. All right, so I did a little bit of work there, and I walk you through in the video how to set this up. And it's really cool because what you end up getting is what you could avoid if you closed down the bakery. So if you made some assumptions and said, okay, we're going to shut this down and dispose of our equipment and not make these baked items anymore, this is the loss that we would eliminate, okay? Notice I gave you a checkpoint here to make sure you tie it down to what you had here. So once you get this all rolled out, this should equal that and be the same as this. And then I ask you, okay, what's the volume to break even? So I'll give you a formula for doing that. Basically fixed cost over contribution margin. It's a huge number. It's a crazy huge number. 100,000 baked items is ridiculous, right? Which, so I say here, it's not realistic that we're going to ever break even. And it's basically because the contribution margin is really tiny. We make like 3 cents every time we sell a baked item. And then I have you run that up. This will autofill. So it's on an autofill based on what you get here. And I have you run one more. So this is what we call sensitivity analysis, where you're running out different scenarios based on different assumptions. So I have you run one more. This time I have you run it with the assumption we're going to charge $6. So if you remember, our price right now is $4.50 for a baked item. So I say to you, well, if we increase the price to $6, what's the break-even volume? How does it change? And then this number that you're going to see here is more reasonable. Still would be a huge stretch for us to get to it, but it's at least more reasonable. And if we can raise the price, that's very questionable, whether we can get $6 for a muffin, right? Have to be a pretty big one. But anyway, if we can get that price for it, then things maybe could come around. If we could generate additional sales volume, then maybe we could make this bakery work. But that's the idea, is to get it set up. That's what I'm having you do here, is get this set up so that we can play with it, right? And change the volume, change the price, change the inherent costs, and have the numbers run really quickly and really easily to help us make decisions about the bakery. And again, if you like this kind of stuff, this is what we do in the more advanced classes. So we do a lot more of this decision-making analysis. So I walk you through some of the things you learned in this class, but then you also learn to take it to the next level. And then I teach a third class that's a graduate level class, a 700 level class. And that one is all cases, and then they're all real companies. And you're making decisions like this. So you need the background, you need a couple of these classes to be able to get through that class well. But that's a lot of fun to teach and learn. So anyways, that's just getting you started there. I hope that'll be pretty easy. Let me go back to my slides. I got just a couple things to finish up. Okay, so this is talking about the bakery analysis. So we call that segment performance, and we're performing sensitivity analysis. Sensitivity analysis is changing the volume up, seeing what break-even point is, running those numbers to see what we got to do to make this turn around, changing price. So you're tweaking things, like you're playing with the numbers to see what happens when you make certain changes. And the only way to do that is to get your costs sorted out, like I said, in terms of what's avoidable and unavoidable. So I'm giving you a bunch of terms here. Let me start at the beginning. I don't want to jump over this. So our primary role in the decision-making process is to decide what information is relevant to the problem and then provide that information in a timely and accurate way, right? So to get that data to the right people in time for them to make the decision, which it sounds simple enough, but if you think about this bakery, they don't have their information organized in such a way. Okay. When you talk to Brad, his reports are organized like the ones I gave you way back in lesson 4. None of the costs are organized or labeled or sorted. And so that's what really the management accountant is primarily responsible for, is making sure the costs are well understood and well sorted so that you can make these little decision scenarios and perform sensitivity analysis and have the right data. I hope that makes sense. Right, so unavoidable and avoidable costs. So avoidable costs are absolutely 100% of the time variable, right? So you'd pick up any of those because they vary with sales. So if you don't have any sales, you don't have any variable costs either. And sometimes, like I was talking about that advertising, you have avoidable, what we call discretionary fixed costs. So those can be eliminated too. And then you have this last group, which are not avoidable. So let me give you an example. Let's say we have the dumpster out back of the cafe. And everybody, all the businesses, all the segments use the same dumpster. And the company charges us a monthly fee for that dumpster. It doesn't matter if it's full or half full. It's a monthly fee to have that dumpster out back. So if we close the bakery, it's not going to change what we pay to have that garbage out there, that dumpster. Right, so then that means the cafe and the roasting business will have to absorb when we allocate those costs out. Remember we did that in lesson 5, we allocated to the segments. That means the cafe and the roasting will have to absorb more of the costs because the bakery won't be there to absorb them. Those are the unavoidable ones. Or take the owner's salary. We allocated that out to every segment. Well, if we close the kitchen, the bakery, that doesn't mean we're going to cut the owner's salary, although you might suggest that. That's not the point. He gets his salary for running that business. So that means the cafe and the roasting business will have to absorb more of his salary if the bakery goes away. So it's that kind of analysis. You got to be real clear about the allocations that you made. And I talked to you about responsibility accounting way at the beginning. And that's kind of what we're getting at here, is how do you sort those costs out so that you can make the right decisions and not get misled by the data. It's tricky. Okay, so this is the format that you walk through when you do that bakery analysis in the Excel file. So I just typed it out here. So what you have to do is get it organized, get that segment information organized into a contribution margin income statement. So it's sales minus variable costs, which remember are avoidable. You can get rid of these. That equals your contribution margin, so when you subtract. And then you subtract avoidable fixed costs. And that subtotal right there is critical. If you're generating a profit, then I would say you keep that bakery going because that profit is helping to cover some of those unavoidable costs. Okay, so it's helping cover. If you close the bakery, then you wouldn't have that income. And those unavoidable costs would have to be absorbed by the other segments. Okay, so this is part of the analysis. If you had a loss, if you have a loss at that level, then that's a no-brainer, right? Close it up because you want to eliminate that loss and do something else. So you could free up resources there and do something else. That's called opportunity cost. Which leads me to the last slide, and I'm just defining some things for you here that we'll dig into more of this if you take the next class. All right, so we call sunk costs that are incurred that have no bearing on what's going on in the future. So we can ignore those costs in terms of making decisions about the future. So you notice in my analysis of the bakery, I didn't figure in the money we spent to acquire the kitchen equipment. It's a sunk cost. So we don't factor it into the future decision moving forward. All right. And then this is something else that we talk about in management accounting called differential costs. So when I did that bakery analysis, I didn't analyze the impact it would have on the cafe. I didn't analyze the impact it would have on the roasting business. I just analyzed the differences that would exist with the baking operation. And we call that differential analysis. It's kind of a shortcut. At first, when I see students working with differential analysis, it's confusing to them because they want to bring in the whole picture. But the point of that is you don't really need to. You just need to understand the impact of those costs. So we perform differential analysis. It's faster and easier. And the last one is opportunity cost. Right? So the potential benefit we give up by choosing to keep the bakery going, right? Or by choosing to do anything as an opportunity cost. So we have to factor that in. I did not factor in opportunity costs when we did the bakery analysis. I'll save that for the next class. I was trying to keep it pretty simple and just have you do avoidable and unavoidable and sort that out. That's step one. And then you have to figure out opportunity cost. That'd be step two. We'll do that another time. Okay, so that brings us to the end. All you got to do this week is get those budgeted financial statements done. And then the one extra tab for the segment analysis and playing around with it. So looking at break even, looking at changing the price. That's sensitivity analysis. And your ratios I included as part of this, right? Don't forget that. So that's it. That's really all I have this week. Let's get that wrapped up, and that brings us to the end of the semester and the end of our coffee example. Do you have any questions?
No, ma'am.
Okay. So I will hop on with you one last time on Monday and talk about the test, the structure of it, and the length, and so on and so forth. If you have any questions during the week, just reach out and let me know, okay?
Sounds good. Thank you.
Thank you.
Okay,
ma'am.
welcome. Have a
Thank
good
you.
week.